Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined by Matthew Yeates, who is a Quantitative Investment Manager at 7IM. Matthew, thank you for joining us here today. We're going to talk about China and the China Congress, or the meeting they had last week. Lots to digest from that, and it kind of feels as if the market is taking its time to consider what has actually happened and what that could mean for global markets going forward. So just give us a brief overview and your take on what that all means.
Yeah, sure. So this is the Premiership final of the Chinese political system. So this is kind of the big event. The Chinese National Congress happens every 5 years. And really what many people have called it is almost the coronation of Xi Jinping. Okay, so this is Xi really affirming and setting it down his power and himself really as the single kind of high leader of the Chinese system, both politically, both economically, from many different angles. And I really think the implications are, I suppose, threefold, or there's three kind of streams that we can think of it through. One is just Xi solidifying his power. Two is, what does it mean for the economic policy going forward? And third, I think, is the political, kind of the way that China sees itself internationally. So on the first one, I mean, it was quite surprising, really. Normally, at the very pinnacle of the Chinese system, you have the Politburo Standing Committee, and that's 7 individuals. And usually the National Congress would be a time to put in the succession plan. So Xi Jinping, a Chinese kind of premier general secretary, would usually take 2 5-year terms, and each kind of that intermittent, that half time, I suppose, National Congress would be the opportunity to put in kind of the succession plan. There were no obvious successors to Xi.
There's no heir apparent, is there? And there were a lot of changes as well.
Exactly. So 5 of the 7 positions changed over, none of which were, as you say, kind of the heir apparent. And then he took a step that hasn't been done since Chairman Mao to kind of put himself as a named individual in the constitution.
Which is huge. I mean, that's huge. If you do anything against him, it's unconstitutional, which is worrying.
Exactly. So it starts from that position of, even if there's no successor, he is going to be influenced. The Xi kind of the Xi monarch is going to continue kind of for much longer. I think then from a market's perspective, as you said, kind of how do we digest the impact there? I think on economics, it was very interesting. So what Xi kind of came out and saying as part of the 3.5-hour speech that he gave was really saying that the emphasis on GDP, as has for so long been the emphasis of Chinese policy, hitting that 6.5% growth target every year, which means you double per capita income by 2020, that's been softened. So it's not so much a target of explicit outright growth now, but really Xi introduced kind of a balance of different measures that they were going to look at. Some were saying not just like an economy that's growing outright, but an economy that's balanced and works for everyone.
But is that an indication that they can't sustain this continual growth rate, or is it a case of they can't fudge the numbers for that much longer?
Well, I suppose it's interesting, isn't it, that, I mean, can't fudge the growth rate. Regardless, if you talk about a range of growth in which China has been managing to fulfill over kind of the last 5-10 years, when people have been calling for a soft landing, a hard landing, a catastrophic landing, they've continued to grind out growth, and growth that's well above, I suppose, the level that has been achieved in the Western world. So in the post kind of 08 era, you've got this new normal of Western growth that's slowing. Really, as a percentage of that growth rate, China's slowdown's kind of been kind of no less than that. And actually, really, I think one of the pillars of the economic policy that came out of that standing committee was Xi showing that the Chinese model of growth, capitalism or socialism rather, socially kind of conscious economics with a Chinese twist, is a real alternative for the Western model that's traditionally been so predominant. And I think the de-emphasizing of GDP is important, because kind of, as you said, making up the numbers, how do we fudge the numbers to get to that kind of magic target? I think the Chinese government doing all it can full steam, and many of the issues with the Chinese economy, I suppose, is the debt bubble kind of that some people point to, doing everything it can and fueling unsustainable kind of debt-led growth. Maybe it's just a nod in the official policy that they don't need to. The model is working. It is grinding out at above Western levels. Wherever we can argue about that the final number in terms of GDP growth lands, let's try and do that in a more balanced way. And so I think it was a nod to that, and I think that's going to create more sustainable growth in the long term for China. I think the final kind of pillar, as I said, beyond economics, was the political one, and Xi really setting out where he sees China as a leader, both kind of in the Middle, in the Far East rather, but also globally. I think there was a nod almost to the disruptive politics of the US, and maybe the fact that the US under the Trump leadership is going to struggle, given I suppose part of the economic story that we've talked about already, to continue to be the leading force in global geopolitics that it has been in the past. So China really setting out its stall in that piece as well. I think on that final point, there's a really interesting play there in terms of, we're talking about what can rock markets at the moment, what are people concerned about. The North Korea story's gone to the back a little bit, but really China is the linchpin in the whole North Korea story. I think there's an aspiration on behalf of North Korea to kind of continue its course towards nuclear power. I don't think anybody's going to be able to derail that other than China. And the way that China asserts pressure on North Korea in a world where it's setting out its stall as the new economic model, as a standalone political power who doesn't need to nod to the old geopolitical model of US dominant politics, that's going to be interesting, because the way that Donald Trump and China interact around North Korea, that's the real risk. There is a very minute tail risk to markets, clearly, and it's not a tail risk to markets and tail risk to kind of the world that we have a nuclear incident in relation to North Korea. I think there's a much more real risk that's less in the tail, but more in a kind of 20 to 30% probability that the US and China fall out over the sort of pressure that China is putting onto North Korea in response to its nuclear program. If we see that happen, then we're back into 2015, then we're back into people Q3 2015 not believing in the Chinese kind of story, the Chinese kind of ability to do anything other than manipulate and try and stand on its own 2 feet. That's when you see that risk start to price back into markets. And I think that's one of the implications of China say, we're going to be able to do our own thing. Well, there's a whole kind of market stability built around China not doing its own thing and listening to the international community, especially in relation to North Korea.
I mean, that's key, just to finally pick her up on a point. It is that stability. Now, Xi it feels like he's won his own Hunger Games and he's there, he's top of the tree. But, I mean, something I've taken away from it is the stability element. The fact that obviously they're moving away from the GDP, and we've touched on that, but even kind of the environmental side and actually taking a stand on that. And to me, that shows that China has moved forward. It's become more of a developed economy and a huge global player. The question is now how they actually interact with the US. And I think if they can work alongside the US on geopolitical issues and economic issues, then I think for the global economy, that's great. And certainly when you look at commodity markets, that stability will help, and will help with the likes of Australia, New Zealand, Canada, and their economies, and getting that sustained growth. And I think that's positive. But the real crux of it is how they interact with the US now. Are they going to work together or against each other? And I think that's key for me. Yeah,
no, I think as you suggested there, it's been this development path, okay, and no one can doubt the growth that has taken place in the Chinese economy, wherever that kind of growth final number stands, and also the liberalisation of that economy. And so really when you've got a Chinese economy now where 70% of companies and the capitalisation of companies are in private hands, you've already had a lot of that transition take place. You've already had the tradition from a very much a manufacturing-led economy to the point where services are the dominant force in that economy in terms of sector breakdown. There are some elements of Xi's speech and Xi's kind of economic model that suggest that process is going to slow, but it's already got to a point that's far, far, far beyond the purely closed socialist economy that you could point to, say, in Eastern Europe, kind of back in kind of the early 90s. This is a vibrant, global, open economy, which, as you said, is so important to kind of the rest of the world, commodity markets and export markets. And I don't think that anything that we've seen, even though it's suggesting a slowing of that kind of liberalisation path, is going to derail that imminently.
Fantastic. And just very finally, investors. Are they investing in China? Should they be investing in China, or is it kind of wait for it to pan out and see what these developments do?
So I think in general, if we think about the average multi-asset portfolio kind of around the world from a UK perspective, let's take it from a UK perspective. Investing in emerging markets is basically investing in China, because China is such a large part of that index, if not directly, in large part to its links with commodity and tech companies that have such strong links with China. I think if you look around the world and you say, why are emerging markets priced at a premium over the long term? Why should you expect a higher return from emerging markets over the longer term? Well, it's the political risk. Okay, but when I think about the stability that we've just talked about, I see less political risk in emerging markets than I do in Europe.
Yes.
Around Brexit, around the continued kind of rise of peripheral Europe, kind of segregating parties. I see less political risk than I do potentially in the US. You know, if we talk about North Korea having an individual who's a despot leader at the head, I mean, you could say the same of the US. So when I think about emerging markets, I think emerging markets, and through that, China, are under-owned as a percentage of what, you know, where they should be for a globally diversified portfolio. I think emerging markets offer people more diversification when they think, especially when it comes to political risk.
Fantastic. On that note, Matthew Yeates from 7IM, thank you for joining us here today.
Thank you.